Welcome back to another installment of What Are the Odds? In this episode, I think it would be kind of fun to take a little bit of a different view of the markets and maybe talk about an indicator that we could create for ourselves. Now, one way that traders will oftentimes consider the stock market is in terms of its weekly behavior. The traders will use a weekly market behavior to actually define the market trend, whether it's a bull market, a market that's going up, or a bear market that's going down. So we can define a bull market as one that opens for the week on Monday at or near the low of the week, and which closes at the high or near the high towards the end of the week. So if the low of the week is Monday and the high of the week is Friday, the stocks have trended higher over the course of the week, Monday through Friday. In a bear market, one that's trending lower, typically we'll see a market that opens at the high or near the high of the week on Monday and closes for the week at or near the low of the week. Now we can take the high prices and low prices, or just the open, or even just the closing prices. So in this respect, we can see these examples on the left-hand side of the chart. We can see the definition of a bull market, which is very simply a market that closes on the low of the week on Monday and closes at the high of the week on Friday. And conversely, the right-hand side of the chart, a bear market is defined by one that closes on Monday at the high of the week, and by Friday it's at the low of the week. Now you put these weeks together and we can start to see longer-term trends and how they develop. Well, we can create a custom indicator based simply on these observations, and essentially what it does is it calculates the Monday and Friday closes as a percentage of the weekly range. So let's take an example. Let's say we have a stock with a weekly range of $10 to $20 a share. On Monday, let's say the stock closed for the trading day of Monday at $12. Well, $12 is only 20% of the weekly range. It's only $2 higher than the low of the range. So $2 divided by 10, that gives us 20%. On Friday, the same stock closes at 19, 9 points above the low and 1 point below the high of the week. So we could say, well, it's 90% of its weekly range. Well, our bull-bear indicator, we could construct by taking the average, just to smooth things out, of the Friday as a percentage of the weekly trading minus Monday as a percentage of the weekly trading. So we can do so, and putting all this together, we come up with the red histogram bars. That's our indicator. And we can see how this works. Now, understand what this is looking at. It's looking at how the market behaves on a daily basis and in terms of its week perspective. So while the market may not appear to be strong or weak, it is a very strong signal if it opens near the high of the week and closes near the low of the week. So we can see, for example, this goes back to late 2021. The S&P 500 was trading around 4,700 for the index. At the same period of time, this bull-bear trend indicator started to trend lower. What was happening internally? Internally, what was happening is the market was opening near the high of the week and closing near the lower end of the week. And we can see, despite the fact that the S&P 500 through the beginning of 2022 was actually trading at or very close to all-time highs, what we saw was this indicator was actually traveling south. Eventually, the S&P 500, the bear trend, the downward trend did accelerate and we did move lower. But by the time it did so, the red indicator, the bull-bear trend indicator, actually already showed us a very large sell-off. Now, we can plot these numbers on Excel and we can, go through these strict calculations, or we can very simply take a journal and make a note of how the week trades, meaning where did the market close or open, it's really up to you, at the beginning of the week, and how did it open or close at the end of the week. Did it close near the lower end of the week? Did it open near the higher end of the week? That would be a bear market, a negative trending market, so to speak. And the opposite also holds true. If Monday represents the low of the week and Friday represents the high of the week, well, that I would define as a bull market. So we can, again, plot this information onto a graph and really go through our due diligence, or we can simply make note of how the market behaves over the course of a week and plan our trades accordingly. We hope this has been helpful. We look forward to seeing you back soon.